What's up everyone? Today we are going to be talking about the cup with handle pattern. The cup with handle is one of the easiest patterns to recognize on a chart because it looks like a teacup when you view it from the side. And while it's easy to spot on a chart, not every cup with handle is created equal. There are little details that often get overlooked but are very important in distinguishing between a proper and a faulty cup with handle base. Let's go over those now, and then we'll jump into the charts and look at some examples. So we know the basic shape of a cup with handle looks like a teacup when it's viewed from the side. We want this pattern to form over the course of at least 7 weeks. It can take longer, but we want a minimum of 7 weeks. During that time, we don't want to see the depth of the base exceed 35%. So from the left side high of the base to the low of the cup needs to be 35% or less. There are some exceptions during a severe bear market, but the majority of the time that won't be the case. You also want the shape of the cup to resemble a shape of a U more than a V. You want to see a nice rounded out bottom that shows symmetry. Moving on to the handle area, we need at least 1 week in length there, and typically the correction won't exceed more than 15%. It's important that the handle drifts downward to shake out any weak hands left holding the stock. Also, in the handle, you want to see volume drying up, and the handle should form in the upper half of the cup, with the midpoint of the handle being higher than the midpoint of the cup. Now that we have the basics of a cup with handle covered, let's dive into the charts and look at some examples. Okay, so here's Decker's from 2006. I have our criteria for the cup and handle still up on the screen, so we'll go down the list in order and check them off as we go. So first, here's the shape of that cup and handle. You can see here our cup with the handle. So it meets that criteria. It looks like a teacup when we view it from the side. Next up is the length. It's important to always start counting the base from the first down week in the pattern. If we measure from the first down week to the last week before this breaks out, it's 17 bars. That means that the duration of this cup and handle pattern was 18 weeks, well above the 7-week minimum. Our next criteria is the depth. So we want to measure from this left side high down to the low of the base. You can see that this pattern has a 25.45% depth, well within the 35% limit we're looking for. We can check that off. Lastly, you can see that this is a very well-shaped, rounded out cup with handle pattern. It doesn't look like a V, it's not straight up and straight down. It's U-shaped, so we can check that off as well. Moving on to our handle checklist, we'll start with the minimum length requirement. Again, we always want to start counting from the first down week. So you can see here, 1, 2, 3 weeks. That meets our minimum of 1 week handle length. From there, we want to measure the depth. So again, we'll measure from the high of the handle to the low of the handle, which in this case was 10.39%. Again, well within our limits of 15%. The next criteria for the handle is for it to drift downwards and not wedge up. You can clearly see that from the high of the handle, this does drift down. So we can give that a check. You also want to see the volume dry up in the handle. If we check our volume down here, you can see the 3 bars that make up the handle are well below average, which is this line going across. So we can check that off as well. Lastly, we want to make sure that the handle forms in the upper half of the base. We can do this by measuring from the left side high to the low, and you can see I have this orange line, which is the 50% mark. Clearly the handle is above that. You could also do this by taking the high, which is 1492, adding the low, 1112, and then dividing it by 2, which would give you a midpoint of 1302. You would then do the same thing for the handle. You would take the high of 1508, add 1352, which is your low, divide it by 2. Your midpoint for the handle would be $14.30, which is greater than the $13.02 midpoint of the cup. So this meets all of the criteria for a proper cup with handle. The question now is what makes some better than others? I'm going to bring up some key characteristics that you should look for when you're analyzing a base. So to start, you want to see a strong prior uptrend before the base forms. You can see that Decker's had a very nice run up here of about 44% before it started forming its cup with handle base. Next, we're looking for the pattern to show an overall look and feel of tight and constructive action, not wide and loose. So you can see in Decker's, we have some nice tight closes in these 2 weeks, tight closes on these 2 weeks, more tight closes here, more tight closes here, and more here. So overall, this pattern showed very tight constructive action with tight weekly closes. The next thing you want to look for when analyzing a base is large volume on the up weeks and days versus large volume on down weeks and days. If we look at Decker's again, you can see as the base came up this right side here, volume surged to the upside. All of these down weeks were on low volume. Even on the left side of this base, we didn't have many weeks that were above average volume. We did have 1 week here in the beginning that was a red week. However, the close of that week was near the highs, showing that it was actually a sign of a support week and accumulation. Which brings me to my next point. You want to see more accumulation than distribution throughout the base. So even though some of these weeks are red, they do close in the upper half of the range, which ultimately shows signs of accumulation. Lastly, as the stock breaks out, we want to see overwhelming demand through the pivot point. You can see here, as Decker's pushed through this buy point at the handle, volume surged well above average. So Decker's met all of the criteria for a proper cup and handle base, as well as having those characteristics that make the base that much stronger. If you fast forward a few months, you can see the monster run that Decker's went on. That's why it's important to analyze each base bar by bar to make sure each of the criteria is met and the characteristics of a strong pattern are also there. Now that we've looked at a couple healthy cup and handle patterns, let's go ahead and look at some faulty ones. Okay, the first faulty cup with handle we're going to look at is Intuitive Surgical from 2006. You can see I've outlined the cup with handle here. It's not quite symmetrical and it has a little bit more of a V shape rather than a U shape. However, it does still look like a teacup when we view it from the side. If we measure the length, it does meet the criteria as this pattern is 12 weeks long. If we measure the depth of this base, it comes in at just under 39%, which is above that 35% maximum we look for in a proper cup with handle base. Moving on to the handle, we do meet the minimum length requirement there, this being a 3-week handle, which is well above our 1-week minimum. If we measure the depth of the handle, this one also comes in slightly deeper than we're looking for at 17%. The handle does drift downward just like we want to see, and the volume does dry up. However, one major flaw of this handle is the midpoint is less than the midpoint of the cup. In a proper cup and handle base, we want to see the midpoint of the handle being higher than the midpoint of the cup. So to measure that, you take the high and the low of the base, add those together and divide by 2, then you do the same thing for the handle. In this case, the handle midpoint was 1240 and the midpoint of the cup was 1251. Therefore, the midpoint of the handle was less than the midpoint of the cup, which is not what you want to see for a proper cup with handle base. Yes, this did have a nice, strong prior uptrend. However, if you look at the price action, it's not tight, it's not constructive, it's very wide and loose. If you look at the bars during the prior uptrend, you can see the range of these bars are much smaller and the closes are much tighter than this left side of the base. You can see we have large, wide range bars that close near the lows on increasing volume. That's a clear sign of distribution. We also don't show any clear signs of accumulation throughout this base. Yes, the volume came in as you broke out past the pivot point. However, this base had enough flaws to let you know that this was not a proper cup with handle base and you would have avoided buying this breakout. Let's fast forward now and see what happened. You can see, after many months, the stock price was still below the pivot and essentially went nowhere. There were also clear signs of distribution throughout that time. One last thing I want to look at is what a flawed wedging handle looks like. You can see in this HP cup with handle base, there's lots of flaws already. However, I want to focus on the handle. You can see the handle doesn't drift down, it just wedges up, making a slightly higher low each week. This is a major flaw that doesn't shake out any weak hands. Often when you see a wedging handle, they're prone to failure and something you want to avoid. If we go ahead and fast forward, you can see what happened with this one. After initially breaking out from the flawed handle, the stock eventually rolled over and made lows lower than the low of the cup with handle base. Now you can see why it's so important to go bar by bar and analyze all the small details of a cup with handle base. This can be the difference between a winning and a losing trade. Thank you for watching, and if you enjoyed this video or found any of the information useful, please go ahead, hit that like and subscribe button below to stay up to date with all my new videos.